So we'll start with a new chapter called investment property, a very small, simple chapter. Okay, you have got this thing, no? Just called Cadbury's advertisement, Ramesh and Suresh. Like this, Ind AS 16, 5 star, 5 star in like that Ramesh and Suresh, twin brothers. Like that, Ind AS 16 and Ind AS 40 are like twin brothers, okay, except the evaluation model is not permitted. And one disclosure we have to give, different disclosure. Okay, so we will try to understand, it doesn't take much time also. So what is an investment property? Now investment, okay, so we are going to discuss 4 things. Investment property, its recognition and measurement, and the reclassification. Reclassification is something new, maybe we have not discussed in Ind AS 16, that we are going to discuss. And if you see, none of the standards, we have spoken about the disclosures. If you open the study material, every standard has got a disclosure, but we didn't, everything has got a disclosure. We didn't discuss anything because from the examination point of view, its relevance is very low. But if you see some questions, some chapters like 108, this particular thing, there are questions on the disclosure part. Okay, so we'll focus on that first. Again, time permits, you can always see other disclosures. So what is that specific thing about disclosure here, about Ind AS 34, Ind AS 108? Those focus, we'll focus only on those disclosures first. Like Ind AS 38 is also, there is one intangible, also there is a disclosure, which I'll share you separately. Now, what is an investment property? The investment property is a property. That means it will be either a land or it will be a building. Now, why you are holding it? You are holding just to earn the rental or capital appreciation. That means it's like you want to give it on a lease. You have got some excess money, like your parents also has much have purchased. No? You stay in one house. Your parents must have purchased one more house or some land they might have purchased. What purpose? Investments. That's an investment property. Now they said that other than using the production process, because or administrative purpose, like you are using your, what is about your own house in which you are staying? Is that an investment? No. That will become a PP because you are using it for own, or you have given to your employees. It's a PP. Or you will be holding it in sale in ordinary course of business. Like that, you are a real estate business. Your business itself is to purchase the land, sell the land, construct the house, sell the house. So because for them, Ind AS 2 will become applicable. Now this one, okay, from academic point of view, if you own a property and lease it on operating lease, then is it an investment property? Yes. What about you are holding under, you never own it. You purchased on finance lease, but gave it on operating lease. Yes, because you become the owner. Land held for undetermined, simply you purchase some land, what for God knows, undetermined. Yes, investment property. Existing investment property that is redeveloped for continuous use as investment property. Investment property. Now, you have got a flat. First floor you are occupied, ground floor you are given on rent. Now, partly leased out, partly it, yeah, maybe partially you have to bifurcate, both things are applicable. Held under finance lease and leased under finance lease, no. That means you have taken and you have given to somebody else, 116 becomes applicable. Held under finance lease, see, held under finance lease is no more applicable. We can either lease or no lease, that's the question. Property acquired for a movement of development and sale, then it becomes Ind AS 2. Property occupied by the employees, Ind AS 16, and property held for sale, Ind AS 105. So this is more like a scope. Yeah, operating lease also from a lesser's point of view, no? For lesser, for lesser, same operating or finance is applicable. Only for lessee it is not applicable. Lessee, we don't say anything more like operating lease, finance lease. We say lease or no lease. If lease, ROU asset. Yeah, it's more like a scope, just to tell you. Now, property leads to the other group members. Like what about one parent gives one property on rent to others? Then in SFS it's the investment property, but in CFS it becomes owner occupied. See, the classification is going to change. It may become more complicated. Now, how to recognize and measure? When you should recognize? An investment property is recognized as an asset when obviously it is a future economic benefits and cost. That's why I said, no, it's more like your Ind AS 16. So you should get the future economic benefits out of it. Now, how do you measure? Yes, obviously we will measure at a cost, and you might have what is the cost? Cost is all purchase price, directly attributable cost, transaction cost. However, if there is any startup cost, operating losses, abnormal wastages, etc., this cannot become part of your purchase price. Now, there can be two scenarios. Again, I don't want to discuss here. There can be a deferred payment. That means you acquired one property on a deferred payment. So we understand we have to find out the present value of it, and we have to take that portion, difference portion, as an interest expense. What if you have exchanged one asset for another asset? So in that case, we know that we have to look for the commercial substance and then the fair value, and we have to give priority to the fair value of the asset given up. Now, what is the subsequent measurement? This is the difference. The standard says subsequently you can measure only using cost. Fair value model is not accepted. Revaluation model is not provided. In PP, you can either go for cost model or revaluation model. No? Depreciation is applicable. No? So there will be depreciation applicable. But standard says you have to measure the fair value. What for? Only disclosure purpose. That's why disclosure becomes important here. You cannot do the revaluation. If such fair value is not reliably measurable, you should make the disclosure also. I cannot measure it fair value. When the cost of replacement part is capitalized, like we have seen that, then the replaced parts are derecognized. In Ind AS 16, turbine, we have seen ship and the turbine. Every 5 years you have to replace that turbine. Ship will continue. So there were two methods. One, that turbine you have depreciated over the life of the ship, or you can do the component accounting. So if you are following component accounting, at the end of 5th year, the cost of the turbine is fully depreciated. So there is nothing to derecognize. But if you capitalize this turbine over the life of the ship, then at the end of 5th year, there will be some carrying amount left. So when you get the new item, the old item, whatever balance is there, you derecognize. Simple. That's why these are all not that like rule based or whatever we have seen till now. We have crossed that level. Now, why they suggested only cost model? In fact, investment property is meant for both, no? Capital appreciation and rent. Capital appreciation means my objective itself is for capital appreciation, but the standard says don't go for fair valuation. Now, probably because see, this and PP are more similar. They don't want to mix that revaluation surplus with this. Probably revaluation surplus, they want to see only operational related assets. That's why if you see this is like a carve out. It's not part of your IFRS, IAS. In IAS you find both cost or fair value. In India, only cost model should be permitted. Yeah, it will come, but yeah, that is going to come. That again, if you follow the cost model for PP, also same thing would happen. That you take, but show it as other income, but don't revalue it. Okay, so this is what they have put. It's applicable only for Indian scenario. So this is the only difference. Otherwise, everywhere it is the same thing. Now, reclassification. Okay, before we do the reclassification, we'll just see quickly some theory. Then we will talk about the reclassification, and then we'll solve the problem. So, Netravati Limited purchased a commercial office space as an investment property. So, by reading this, you understand this is Ind AS 40. Because in examination, sometimes they may give you the standard, sometimes they may not give you the name of the standard. In the global center for 5 crore. However, for purchasing the same, the company had obtained a membership of the Global Trade Commercial Complex Association by paying 6 to 25,000 as one-time joining fees. Now Netravati wants to write off this one-time joining fees as an expense of the under the membership fees and value the investment property at 5 crores. What is your advice? Or comment whether your answer will change if the office space was purchased with the intention of using it as an administrative center. Nice question. What is your advice? They asked you, they are in confusion. They are telling, sir, we want to charge it as a P&L. Should I charge to P&L or should I add it to the cost of the investment property? Why? Because without incurring this, you cannot acquire the ownership of that. Okay, comment whether it is going to change if you are going to use it for administrative. What you will do then? Okay, that's okay. But their doubt is on the whether the classification of the investment property or whether what about this membership fees? Yeah, what you are telling? Sorry. Yeah, that's okay. That's not a confusion there. They will capitalize. You will capitalize there also. Okay. They said comment. That means okay. They want to do some other treatment. Advice, they are under a confusion. So you are going to suggest. So now as per Ind AS 40, cost, comprise, purchase price and all directly attributable. One-time joining fees should be added to the purchase price and you cannot take it to the P&L. Now if the moment you go for administrative, Ind AS 16 becomes applicable and that also says you should add the directly attributable cost. So in both the scenario, the cost would be 5 crores, 6 lakhs, 25%. Are you clear? I said no, it's both similar. It's like very similar standards. Now X Limited purchased a land worth 1 crore. It has option either to pay full amount at the time of purchases or over 2 years period 1.2. What is the cost of the building under both the payment method? Yeah, we understand this. It's the deferred payment will be involved. Okay, it doesn't matter like whether what it is, whether it's a PP or whether it's a investment property. Our answer will remain the same. So we say that our cash price equivalent, that answer keyword should come in your answer. Okay, so you will have the second treatment will be treated as an investment cost. Either the payment will be your 10 lakhs and balance that 20 lakhs should be treated as an interest expense over a period of 2 years. Yes, so we'll solve some problems, then we will come back to the reclassification questions. Take out question number 1. X Limited purchased a building for 30 lakhs in May 2011. The purchase price was funded by a loan which is payable by at 5% interest. The property taxes, direct legal cost respectively incurred in acquiring business in 2011-12, X Limited redeveloped the building into retail shops for rent under operating leases to independent third parties. Yes, this understand that. Yes, renting under operating leases, you redeveloped some properties. We discussed, it is covered by your Ind AS 40 only. Expenditures on redevelopment were planning and construction cost. What is the cost of building to be recognized? Yes, can you pause the video and tell me, calculate the value? You can do it, you can write here. Okay, I'll give you a start. Okay, solution, purchase price. Is it part? 30 lakhs. 39. Okay, others. $39 lakh. 80. Yes, Aditya. What is the cost? What should go into my cost? All direct costs. Now what about the interest portion? Why? Huh? Yeah, why? What we should do? Why? Why we are not capitalizing that also? Sorry? No, but he has taken, no. He has taken, right? Now, is Ind AS 23 is applicable here? See, Ind AS 23 says that it is a qualifying asset. Is this a qualifying asset? Which takes a substance. Asset means what? Any resource you control, which is going to give you the future economic benefits. Is this an asset? Is it a qualifying asset which takes substantial period to get that revenue? Assumption. Okay, see, understand, student, why I'm asking you, you just miss this point, you will lose 1 mark there. So there is one interesting, why they have to give, what you are going to tell? Are you going to tell that it will be charged to the P&L account? Followed, no? So, no, your assumption is correct. You should go to P&L account, but the point is you have to give a note there. When they have given you specifically, you cannot ignore it. If you want, take it by giving an assumption that assume it is qualified substantial period. If you don't want, don't take it, but give a note under both the circumstances. Is any other note required or any other assumption required? No, reasonably fine. Okay, so we can proceed further. No? You need not note down, you can always practice this. So the cost of the building includes your purchase price, transfer cost, legal cost, permissions, construction cost, and you are going to deduct the refundable cost. Okay, your answer is not complete with this. Yes, you are clear, no? This why we have taken all these components. Now your answer will not be complete unless you specify that building is not going to qualify. That's what that 5% we are charging it to the P&L. Okay, this portion is optional. I don't suggest. Now for the year, X Limited incurred the following expenditure in acquiring the property for 6 identical houses with separate legal title, including the land on which it is built. Now expenditure incurred on various dates they have given you, purchase cost of the property they have given, non-refundable taxes, legal cost, advertisement campaign, opening ceremony. Throughout they include 1 lakh hours day-to-day repairs and maintenance, and X Limited uses one of the 6 houses for accommodation of its few staff. Other houses are for independent third party letting out. How should you account the above mentioned expenses in the books? How much? Okay, how do you answer this question? See, this question may come in the examination. I don't know, they asked you how you will account all the above mentioned expenses in the book. So will you talk about single? Okay, we'll do one thing. Will you give it try as if it is an examination question? Just think, it is an examination question. I will tell you the marks. Okay, I've given there. Okay, it may come for 4 marks. Let us see what you will do. Yes, students, please pause the video. Yes, students, so we'll check the answers. Okay, first of all, you tell me, is this cost will be part of capitalization? This one? But they said something not included in the purchase cost. Yeah. Okay, so this is not refundable. We have to add. Legal cost? Yes. Then this? No. Okay, this should not be part of the thing. And they said how above cost. So first of all, day-to-day expenses? No. Now, you are going to say the cost of the property will be 2 crore 5 lakhs. Is this number available in your answer, whatever you have come across? I want to see this number, cost of the property is 2 crore 5. That means you have capitalized. Yes, Aditya, you have included this. Okay. Then you are going to say that all the other expenses, whichever you said, if you want to tell individually, tell individually. If you want to prepare one sheet and do this, see, in the study material, they have done the working like this. If you want to do a separate presentation, you can do it that way, like a table type of thing. Now, but you need to say that like advertisement, ceremony expenses and repair, specifically you have to tell this cost will be expensed out. Is it there? Yes, 1 mark. Huh? P&L. It will be expensed off means charged off to P&L. Now, out of 5, since 6 are rented out, okay, 5 are rented out, 5/6 will be accounted as an investment property and 1/6 will be PP. Is your answer having number 1,70,83,333 and in front of that have you written investment property? No, no, okay, doesn't matter. Yeah, you write in your own language. But if I am an evaluator, I am just looking that you will say out of total cost 1.7 is the investment property. Are you communicating me that? And PP is 34 lakh 16,000. Are you telling me this? Yes, then I'll give full 4 out of 4 to you. Because in this process, you have explained me every single element of how to account, nothing you have left it out. And you explained in a very clear manner. Followed, no? So probably in the examination, they may use the word, okay, they didn't use any verb only. They said repeated the same. How will you account? Account, I said, is a very dangerous word. You have to explain properly everything there. Okay, maybe if the more marks are there, you have to explain about the amortization of this. How you are going to do, how the subsequent measurement is going to happen. See, that's why I always know, see, this problem you will face only in FR. In AFM, almost questions are fixed. Audit 5 marks. But FR is one subject, they will ask you 4, 8, 12, 7, 6, 14 and theory is mixed there. So you have to apply your judgment and see what I am writing, is it worth that much? Or you may have to write something more also. Follow? Now, see, this question came in your Jan 21 examination. Well, read, do you see that it is the same question? For 5 marks it came. What I see that there it was excluded, here it is included, to see whether have you understood what you need to do. Okay. Then one fitting they added. Refundable taxes they said excluded, no? Here it is, they have said including. So you need to think now what you need to do. You are sitting in an examination hall. Already you have solved the problem. We discussed, you got 4 out of 4 in the study material. Now you have to get 5 out of 5 in the exam. But they gave one more fitting there. Also discuss, means you theoretically you have to explain how this will be shown in the CFS of the group and in the SFS as per relevant Ind AS. No, read the question. I don't know. Okay, if you want me to read, entity purchased an office for 50 lakhs, refundable taxes, direct expenses, all these things, then need building approval, construction, labor, material. They developed the building, completed on 1st of October. Entity rents the ground floor to its subsidiary. Previously, they were using their own. This time, the parent gave it to the subsidiary. Under an operating lease, the subsidiary uses the building as a retail outlet for its product. They are using it for their purpose. They again didn't give the sublease. The entity kept the first floor for its administration and maintenance of stock. Equal value can be attributable to each floor. Yes, students. So please pause the video and solve this problem and let us see how do you understand this, how do you interpret in the examination hall. Okay, so operating lease concept, see, if you are the lessor, you may own some building, you can give it to me. Now, when I am taking this building, it may be an operating lease where I will give your asset back to you, or it can be a finance lease where it is not, it is considered like a sale only. So, if it is an operating lease, then 40 becomes applicable. If finance lease means it, you cannot recognize, continue to recognize, no? Lesser, operating and finance lease is applicable only for the lesser. Clear, no? Finance, both are 116 for applicable for lesser only. Lessee 116, but no more finance lease, operating lease. ROU or no ROU? Yeah, very nice question. Yeah, student, just 1 minute. Huh? You are given something on property on rental income. Then 116 should be applicable, no? Why 40 is applicable? See, when you have got this property, you have given this on rent to someone. The income what it comes, it is as per 116. It is the rental income. This property, how should you value? Does your Ind AS 116 will say? Because if it is the finance lease, first of all, as per 116, you will derecognize the property. So 40 doesn't come into picture only. It will come only for operating lease because you own the property, you have given it. Now, what is the purpose of that property? To earn the rent. Will you revalue it? No. 40 doesn't permit me. So 40 is applicable for the property, not for the interest in that rental income. I hope you are clear. That's why nice things come from the questioning. No, you are confused, you ask questions. Even if this point never came to me, I also never thought. Very nice question. You understood now what is applicable to whom? Yes. So do the working. Yes, students. So we'll compare the answers. Okay, did you see the catch in the examination question? Same simple question, okay? But if you see in the examination, one new fitting they introduced called CFS level. So as per all the cost to bring answers, okay, I don't expect this, how they will be accounted. You could have told, yes, you have to capitalize it. So they gave one working and they said 63.4 lakhs, 63 lakh 40,000 we are going to capitalize. So if you have presented in the way they have done in the study material, I am fine. So did you consider this catch here? So first is have you considered the building cost 50? Yes. 2.5 and non-refundable property taxes. Okay, in this 10 lakhs 60,000 construction cost you are going to reduce. This is the catch. 63.4. How many marks? 1 mark, maybe for this number. Now, abnormal cost you incurred 40,000. Did you include it? No, maybe. No, P&L. It should be charged to the P&L. So this is what you are going to write. Now, how do you do accounting of the property? Since it is used for an administrative purpose, it is the owner occupied, and part is earned for rental income. It is the investment property. So the cost of each floor would be 31 lakh 70,000. So you are going to talk about now separate financial statement. So this is what you have explained. Even though you are not have given me the number, this is fine. Or number also you could have given me the breakup. They have not given the suggested answer. How many floors are there? Rents out ground floor to the building. It is a 2-story building, no? Okay, there are only two floors, no? 2 more floors. There's one catch. See the way they pursue. Okay, 1 minute. Okay, so you're clear, no? Catch, see how they will make you perceive things. They could have given with the 2 floors, they could have given 2-story building. Certain English words they will use. Okay, so here 2-story means you have got 2 floors. So that's why they have divided by half. Now in separate financial statement, how do you show it? So ground floor will be the investment property and first floor will be classified. This is that study material question up to here. At a CFS level, what you will do? You will say everything is entire amount is a PP. Have you told this entire 63 lakh 40 is a PP? Why? I explained no before that theory. I told you group might have given to subsidiary. So at a consolidation level, it's 1. No problem. See again, this question is framed based on something there in the study material. Anyhow, even though you have scored 4 marks, because I may think only mark allocation may be 1 mark for this. But if you think carefully, understand it, you can always answer no. At a CFS level, what should go? Even though you are going to a subsidiary and what for they are using it? They are using for a business. So at a CFS level, you and parent and subsidiary is 1. So you should look into the nature of the use. Nature of the use is they are using for their own purpose. So and first floor you are using for your own purpose. So entire building will be PP. Are you clear? each floor. You left the second. You should see both are different now. Yeah, 31.4 is correct. But in SFS, when you wrote, have you told that one is investment, one is PP? You're told. You didn't give the heading like this. That's fine. I'm okay with that. Maybe you should also done that way also, some places. So I am giving it in a standard format, but they have mixed it also. In one place only they explain both. In SFS it will be like this. In CFS like this. So again when it came to CFS, have you told it is one? Okay, that's sufficient. Other by default it's PP, no? See, which one you rented? Ground floor. Okay, so I'll present you something like this. You have got SFS, you have got CFS. See, ground floor is rented, first floor is occupied as a PP. This is first, this is ground. Since first is occupied as a PP by the parent, you take to CFS, we have learned everything we have to take. So it's PP only, no confusion. But in SFS, since it was rented out, it is investment property. But at a group level, it is you only using it. So it's a PP. You could have presented this way also, fine. Presentation, anything is fine, but you have to tell the certain numbers. Followed, no? And I'm assume that they will allocate 1 mark. But if they want to play, they might have allocated 2 marks also for this. The probability is very high because with that, no, you come at the middle there. Okay. Question number 4. Sum Limited acquired a building in exchange of a warehouse whose fair value is 5 lakhs by payment of cash rupees 2 lakhs. The fair value of the building received is 8 lakhs. Company decided to keep the building. How you should account the transaction? Please pass the journal entries. Previous question is clear, no students? Yes, students. So can you pass this journal entry? Can you please pause the video and do it? And think you are writing for the exam again. I want to compare the answer. Okay, so now again we will discuss if you have got a doubt. See what happened now, this is a barter. Sun Limited exchanged a building for a warehouse. So what goes out from you to building? You don't have any headache there. You credit building with the book value. The question comes, what you received is a warehouse. Your son acquired a building. Okay, sorry, it's a ulta. You got a building. Yeah, exactly. Otherwise, India is 40 minutes because warehouse is not a investment property. No, the land or building is an investment property. So you acquired a building. You gave up warehouse. When you give up warehouse, there is no confusion because always what goes it is the book value. Only question comes, what is that comes to you? What is its value? Ind AS gives one rule. It says first, is there a commercial substance? Is there a commercial substance? Yes. What is the? How do you know? Then you say, what cash flow I'll get from using the warehouse? Well, it's totally different from building. Follow? That's why there's a commercial substance. And then fair value. When it comes to fair value measurement, first you need to check the fair value of the asset given up. Which you gave up? Warehouse. Have they given you the fair value of the asset given up? Fair value of the building received is 8 lakhs. And whose fair value is 5 lakh. And what you gave up? This plus cash you gave up. Or is the fair value of the asset received is given? Yes, both are available. When both are available, the standard says give priority to what you have given. So give priority to this. Now the problem here is, it's not just passing journal entries. If you see this question, there are two questions there. What is that? How do you account it? What you will say? Whatever we discussed, you are going to say first. that whenever an exchange happen, whenever an investment property is acquired in, for a non-monetary asset, then the entity should account it at the fair value of the, check the commercial substance, all these stories, no? And then you have to give the journal entries. Are you clear now? Which one? Warehouse is never an investment property, no? It is a, yeah, generally see, again, it's a warehouse is also a building. Yeah, we can treat that also, because again, if you have purchased a warehouse just to rent out, that's an investment property. Any building or land you have taken to rent on others, not for your business, is investment property. It need not be that warehouse is warehouse, no. You take that on rent and give it to rent. Okay? Yes. Can you pass the journal entries now? Okay, students. So we'll check the answers. So in the given case, investment properties in exchange. So they asked you, how do you account? So you are supposed to say that it should be exchanged for a monetary and it may be non-monetary. When the fair value of both the assets are given, it is presumed that it is equivalent. Then you have to given up, consider to be the which is given up. So again, you have to see which is more evident. Even though they will give you more, but in the examination question, suddenly they will add one sentence that the fair value of the asset received is more evident. You have to give first priority to more evident. But when both are equally evident, you have to consider the fair value of the asset. So did you pass this journal entry? Building account debit 7 lakh, 2 cash to PP. Or is any mistake happened? See, first of all, warehouse goes. Have they told you the book value of the warehouse? No. At what value you credited? Fair value. Why? Because you have to make an assumption, since they have given you a fair value, okay, that warehouse must have been a PPE and they must have followed Ind AS 16 and fair valuation, revaluation model. If they don't give, what you will do? So at what value is the fair value of the building received? 5 plus 2. Are you clear? Yes, any mistakes? That's what happened. Profit. How did you get the profit here? You took the building received 8 lakhs. Okay. But it is a, both are given, no? No. However, the fair value of the acquired is more clearly evident. Yes, if at all, you must have passed this entry. Then have you changed the assumption? Then you will be given, you will be awarded. Okay, in the illustration 2 of Ind AS 16, similar question is there. They took the fair value of the illustration received. Same, 8 lakh they passed. So do it. There is no hard and fast rule that this is what you need to do. But whatever you do, you have to do with the assumptions. Next question. On April, entity acquired investment property 40 lakhs. Management estimates useful life is 20 years, measured from the date of acquisition. Residual value is 2 lakh. Management believes SLM method is the best way. What is the carrying amount of the building? Okay, right. What is the purchase price? 40 minus depreciation. How much? 40 minus 2 by 20. 1.9. So your book value will be 38.16. Clear? Yes, see, none of the examination question seems to be examination question. Even though that one particular question was there, you have seen how it comes with the twist there. Okay, be careful whenever you understand the verbs given. So next question. X Limited owns a building which it is using to earn the rentals. The building has got a book value of 50. Okay, now you understand that this is an investment property. X recently replaced its interior walls of the building and the cost of the new wall is 5 lakh. The original walls had a book value of 1 lakh. You must have built something interiors. Okay, but interiors will, see, building will remain, but interiors you may have to change after some time. So in this process, 1 lakh book value is still pending, and you demolished it and created a new wall, new interior. Now advise how you are going to account the above cost. Derecognize it, add the additional thing, and this is something we discussed now, something similar to turbine and roof problem. Okay, so again, can I proceed further? We are done with this chapter now. Last 2 more questions. With this we are done with the practical question. I will show you certain theoretical questions which are highly probable here. We cannot ignore such theoretical questions. So you are going to say that as per 40, the cost of replacement part is to be capitalized and the carrying amount should be derecognized. So you should add the cost of the new and remove the old. So you had the book value 50, add 5 minus 1, the new book value will become 54. What accounting entry is? PP 5 to bank how much? 5. To PP 4. Then does it make sense? Tell. What is that 1 lakh? I want to know now. What you should see. Tell me the journal entry, Baba. It's just a matter of journal entry. No, PP, if you tell me 4, I agree with you. To bank, nobody can change this. What is that 1? Sure? Confident? Yes, what is your opinion? Yes, it's P&L. No. Why, first of all, P&L came now? Why? Because the logic behind this is, there were 2 ways you could have accounted that internal wall. Either the life of the building, or you could have done on a component basis. If you would have done component, you know, when you constructed that internal wall, you know that the life is only 5 years. Building life is 20 years. So if you would have done that component wall depreciated only for 5 years, every year you would have charged high amount of depreciation. That is called accelerated depreciation. It would have gone hit your P&L account from time to time. But what smartness you did? You added it to the value of the building and depreciated over for next 20 years. So every year that wall was going to get died now. But every year what depreciation was you are taking to the P&L was very small amount. At one day came that when this wall has to be replaced. You replaced it, but some still book value is there, which is, it's a useless. No, this wall is useless now, but still book value is there because of your wrong depreciation methodology. But it was a choice. It was your own choice. You could have done that. If you wanted, you could have charged high amount of depreciation so that today's day the book value becomes 0. Then what is your accounting entry? 5 to where? No, it's to the P&L account. Have you understood the concept and logic behind it? Okay, why I'm telling you all this thing? This is the theory you'll write, but more mark you should be able to explain there. Okay, if they say analyze and interpret or something like that, no, you should tell why it came, what they could have done, how this component accounting they could have applied to this. Okay, not required as of now. Clear? So the last question on the practical I don't say because it's working like a theory only now in this chapter. Correct, no? You are working, nothing you must have worked out. Sun Limited Aeronautics Company having a building given on an operating lease. Okay, that means it's an investment property. Book value is 2 lakh. Pluto offers to buy the building at 4 lakh rupees. And in the case C, Pluto offers to take the building on a finance lease for 10 years at a lease rental of 80,000 per annum. The present value of the minimum lease payment is 3 lakh 20. What is your journal entries? Example, okay? You tell me the journal entries. Anyhow, you can take this PDF, you can think like a theory. It's a more like a theoretical standard. Yes, students, in the first scenario, when they want to take this for 4 lakh, what accounting entry I should be passing? Sorry? Building to cash? No, in whose books? Huh? Sorry? Question is silent here. Anyhow, it's an example, but they are looking in the books of Sun. Bank account debit for to building to gain. Easy, no? Now tell me in the second case, which is little tricky, but not that. You wanted to take building on finance lease. Finance lease means it will never come back to me now. Finance lease means, suppose you are this Sun, I am Pluto. This building will be for me now. Only thing I will be paying you lease rent is like a EMI I pay you for next 10 years. It is also per annum. And the present value of the lease rent comes to 3,20,000. Now you are a lessor. See, Pluto is a lessee. For them, finance lease, operating lease is not applicable. For them, lease is there or lease is not there. Now, when you are a lessor and you have given a property on operating finance lease, have we discussed in 116? We discussed 5 criteria to classify whether it is a finance lease or whether the present value equal to its fair value, whether have you compulsory transfer, is there any option, is it customized? Okay, that analysis is not required, but they said, okay, it's the finance lease. If you finance lease, what accounting entry the lessor should pass? ROA asset comes for the lessee, no? You remember gross investment in the lease, net investment in the lease. Is there a third party guarantee here? Okay, tell me the journal entries. Is there a third party guarantee? You remember, no? Third party guarantee will be the residual value guarantee by the third party. Gross investment here taken together is, but he will pass our revenue recognition entries. Please go and check. Anyhow, tell me the journal entry here. Bank he didn't give, no? Sorry? Yeah, what do you call for this financials? Okay, ROU, no. Lease receivables. Because ROU is only in the books of a lessee. If any balance sheet you see the word ROU, you have to interpret that it is for the lessee. How much? 3.2. Then 2. Investment in the lease. No, 2 what? No, is everyone okay with the debit lease receivable? Anybody has got any other opinion? Yes, you can call it by any name. You can say net investment in lease, gross, you call it by any name. Ultimately, it is lease receivables for you, whose nature is more like a financial asset for you. You got a contractual right to receive. 2 what? Investment property or building. Why? See, we have studied in 116 that finance lease means you have to de-recognize your asset. How much? I know headache. Always we know that. At a book value only, wherever it comes, in whichever standard, wherever in life, what goes out as the book value? 2 what? Yeah, that's it. Simple, no? So in the first scenario, you pass 4 lakh to 2 lakh to 2 lakh. If it's the lease, if you are given on a lease, it's 3.2 to 2 to 1. So till now, we have seen that it is not any catch only. Almost we are done here. Correct, no? No, again, that depends upon who are you. Like if your business is this or you are not business. Maybe if question is very silent, if it is, it's not my business. So this is the correct entry. If that's what I'm telling you. See, if my business is not this, if business is not to give on finance lease, I would have passed this entry and this I will take to P&L account. Full. Which one? Hare Baba, how do you receive? What you receive is over the 10 year this. Its present value is 3.2. This is today one asset has gone out. No, whichever is carried at a book value. This is your today's gain. In fact, if this is your asset, inventory, your business is this, then you will not pass this entry. You say COGS to revenue. If your business is to give on finance lease, then revenue comes. The difference between COGS, it will be inventory, and difference between your COGS and revenue is your profit, which is this 1.2. If it is your business, then you will not pass gain on disposal as a single line item. You will say revenue, COGS. The difference between becomes your P&L. Yes, you can just refer back. Again, not high probable thing. Already this concept would have discussed this. For him, see again now, when do we say investment property? It is not because standard has told. It all goes with what purpose you are holding it. If the lessee, whoever is taken, if he is going to use it for his business, it's an ROU. And since why it is finance lease? Because the life may be more and you may be having a right. So at the end of 10th year, you transfer from ROU to PP. That's the depreciation will charge on which value? 10 years or 40 years? 40 years. We have discussed in 116. The depreciation should be the lease term or life, whichever is higher, provided you get the asset at the end of its useful, at the end of the lease term. Sitting, no? Everything is sitting in your mind, interconnected, mapped. Yeah, please revise. Okay, again, I wish, I really, what is it called, hope that when you go back to my material, see, I have just given that chart book, no? How much you need? Okay, you study thoroughly, all the questions, internal catch, no? You will understand from that. You need not refer again study material. What? See, but that is limited only to problems, huh? You will get a hold over the problems if you go through my study material, the chart book. Because whatever adjustments required, no, I would have told it. Look, this is the thing. Like for example, this, I have told that adjustment in the form of a chart book. So study my chart book thoroughly. All the questions, adjustments you will understand. Where, what, how, why. And then you have to solve. Solving is different. Understanding is only here. Solving means you have to sit and solve. Clear? Yes. So we will discuss now the last part. Reclassification, which is a different thing here, okay? In this particular chapter, reclassification is something new, which is not there in the Ind AS 16. Means it is there, we didn't discuss, there are no questions on that. Now, what is reclassification? Reclassification means you might have shifted investment property and you started to use it, or you converted an investment property into an inventory, or there was an inventory, you converted into investment property, or there was a PP, you converted to investment property. So any interchange may happen in this usage status. An entity can change the classification when only it is change in use, because again, business accounting cannot direct the business there. Business will direct the accounting. If your change happens, automatically accounting has to change. So understand, it is not a policy choice for you. Oh, it's my wish, I will change today, this year PP, next year. No, no, no. Have you started using it, which you were renting it earlier? Yes, then shift, no. So it's not a policy choice. Huh? It's not like a cost or revaluation model that I can choose with the retrospective effect. No, your purpose has to change there. Mere the intention also, no. You come and tell the auditors, I want to do it. No, you demonstrate it, no. Such a reclassification do not going to change any carrying amount, and they do not change the cost also. So at whatever book value it was there here, it will get shifted here, or whatever book value it was there, cost or NRV, it will get here. It might have been impaired, it might have been revalued, it doesn't matter what it is. On that day of change, whatever was the book value of that particular property under whichever group it was, that is going to become the new book value under news regime. Previously, you might have called it cost or revaluation. So today's date is a revalued amount, but the moment it becomes investment property, is going forward only cost. The change in the classification due to change in the property is not a change in accounting policy. Thus, you don't hence needs to be adjusted prospectively. Retrospective not required. Retrospective means third balance sheet, last year's first day. Okay, we'll just see some theoretical question and then we will come to the main, very important one, big question sitting on the disclosure. Reclassification. X Limited has got an investment property which is carried in the balance sheet on 31st March 2011 at 15 lakhs. So its book, it is already an investment property and its book value is so and so. During the year, they stopped letting out the building and used its office premises. Yes, now you understand that there is reclassification. On 31st March 2011, the management estimates the recoverable amount of the building to be 10 lakhs and remaining life to be 20 years. Residual value is nil. How should X Limited account the above investment property on 31st March 2011? Sorry? You have to reclassify into PP. Now at what value? Book value. But is it subject to impairment now? Yes, you have to check for impairment. Even for that also you have to check for an impairment. So now new value would be your 10 lakh rupees. So you say that there must be transfer the property to PP because there is a change in the use. Mere intention is not the thing, and it should be made at the existing book value of 15. Since the recoverable amount is 10 lakh, then you have to charge the impairment cost and debit to P&L account, and next year onwards you can depreciate it for remaining 20 years life. Low probable question. Again, see, you see I have given the marks, no, some rough marks for your understanding. Wherever 2 marks are there, those concepts on a standalone basis, very rare that these questions can come. But in a big question, this can be one of this concept can be the part. That's why I am discussing your revision time. I suggest you can give low priority to this. Big questions you spend more time. Moon purchased a building at a cost of 10 million. Building used as a factory and measured under cost model. Where, under which standard? Which standard? Ind AS 16. Why? Because using it as a factory. Now it's a PP. Expected life is to be 10 years. Now due to decline in the demand, company does not need the factory anymore and they started to rent out the building to a third party from 1st April 2015. When? 1st April 2015 you should treat it as an investment. On this date, the fair value of the building is 8 million. Moon uses cost model for accounting of its investment property, obviously. Now determine the value of the building on the day of reclassification. Yes, students, so please pause the video and tell me what is the value on the reclassification. See, now it must transfer the property and it must disclose the reclassification. Yes, the transfer will happen at a 6 million because 10 minus 4 year depreciation. Okay, what happened? What? You didn't see the 4 years, huh? Okay, understood, no problem. See, making more mistakes, you will remember. Now, recoverable amount is more and this gives that no impairment. Maybe in the examination, the previous element they may bring it. So, impairment you have to charge, but you cannot show it at a fair value. Keep that in mind. These principles you should know. Thus, you should depreciate it over the remaining 6 years life. So, this question is RTP. So, it is a high probable which is there in the test your knowledge. X Limited is engaged in the construction of the construction industry and prepare the financial statement 31st March every year. Okay, you are already into a construction industry. Keep that in mind. On 1st April, X Limited purchased a large property consisting of land 2 crore rupees and immediately began to lease the property to Y on an operating lease. Annual rentals became 20 lakhs. Understood? So, in your mind came that okay, it's an investment property and you are earning 20 lakh rupees operating lease. Now, 31st March 2015 came. Yes. Yeah. You have taken one land. Now that land, what did you started to construct? No, it was a vacant land. So somebody came and says, sir, can you give me for parking my vehicles? Okay, no problem. You give me 20 lakh rupees per annum. I'll give this land. So in Lord, see, these people know they are this real estate companies and all. Wherever possible, they just take the land and keep with them. Okay, because they can construct any point of time. This money is shortage, you sell it, shift it. Their business is that. No? So you don't want this. So indeterminate use, if you have purchased a land, what it is? Investment property. Now in the 2015, the fair value of the property is 2.6. Under the terms of the lease, Y was able to cancel the lease by giving 6 months notice in writing. And he gave this notice on 31st March 2015 and vacated the property on 30th September 2015. Understood now? It's the land only. He said, sir, parking no more. 6 months notice he gave, he vacated. Now on 30th September, the fair value of the property is 2.9. Now on 1st of October, next day, X Limited immediately begin to convert the property into several flats of equal size. Now he started to use that for constructing of. So what he did? He made one plot or flat or God knows what he has done, which he intend to sell in the ordinary course of his business. X Limited spent 60 lakh on the conversion of the project between 30th September to 31st March 2016, that last 6 months of the year. The project was incomplete on 31st March 2016. What it is then? Work in progress. Capital work in progress or work in progress? Work in progress. Because it is Ind AS 2, it is an inventory for you. Directors estimate that they need to spend further 40 lakhs to complete the project, after which you could have sold it for 50 lakhs. Now examine and show. See, examine means look at the components. When you go to the goldsmith and say, please examine this, he will examine very closely with putting ice, some this thing and all, he puts into the fire, puts some this thing. Like there are so many components, you have to look into these components. That's the meaning of examine. And show. Show means maybe probably they must be asking to present it. How the 3 events, which are 3 events here? Purchase of the land, lease, and the conversion into this, reported in the financial statement for the year ended 31st March 2016 now. Which 3 events they are talking? Okay, so first event is on 30th September, that is one event, you constructed. But they are telling how show 3 events for the end of 31st March 2016. No. Purchase happened when? 2011. No. So this year what happened? 15-16. He gave the notice for cancellation. Yes. Tell me, students, what all the things happened here? First thing, reclassification. Okay. On the date of reclassification, what is the value of the investment property? Because it has become investment property into inventory, no? What is the value of the inventory? Okay, first of all, theme is flow is clear, no? Now, the only first question is, what is the, on the date of the, let us go with the first thing. What the very first event happened is the reclassification. On the day of reclassification, what is the value of my inventory, or what is the book value of this land? 2 crores. Then you convert it into your inventory. As on 31st March, okay, what is the value of the inventory? Now, at the end of the year, is it your inventory? Work in progress. Work in progress should be, is covered by which standard? Ind AS 2. It should be shown at what value? Cost or NRV, whichever is low. What is your cost? What is your NRV? What is your NRV? Ten flats, no? That's why let us see. See, that's what Baba, I'm telling you, this is ICI. Yeah? See, they have told you in English language here. You will sit and wonder what it is, where it is. If you miss this, you are going to really miss this. Tell me, what is that? What is my NRV? Okay. But that is a finished product, no? What the definition of NRV? Estimated selling price minus, do you have got a cost to sell? Cost to sell? No. Do you have got a cost to completion? How much? 40 lakhs for how many? 10 flats. Huh? Complete the project. Baba, you have to read it very carefully. That's why they said examine, no? Examine means you have to very carefully you have to read the component. You have to say that 40 lakhs is my cost of completion of 10. That means per unit is how much? 4 lakhs. If you minus 4 lakhs, your NRV is your 46 lakhs. What is your cost on this day per flat? Per flat, what is your cost? Per flat, 46 is your NRV. Per flat, what is your cost? 60. That means 6 lakhs. 6 lakh is your cost. Plus you have got this thing also, no? 2 crore investment. Followed, no? That way we have to check. Okay, let us check the answer. Understood, no? Please practice these questions. I have marked it very important. This has come in your RTP also. These questions, now this is the first question we are coming across which is highly probable here. Followed, no? It may come for a big number of marks. So first you are going to speak that and high probable they may give you as it is with the change in the number rather than 10 flats, 15 flats. On 1st April 2011, okay, the property, okay, they are talking about the reclassification. See, examine and show how these 3 events may be a confusing fact. Yeah, again they are talking about the original. On 1st April, the property was an investment property and you have carried at a cost every year as per Ind AS 40. Now, on 30th September, the property ceases to be an investment property. It's going to be covered by 1, 2. Such a reclassification is not going to change the amount and it will be transferred at the 2 crores only. So, you know that on the date of on 30th September, the reclassification happened at 2. This is event number 1. Are you clear? First, that's what we discussed also. Event number 2, recognition of the rental income for the 6 months. Since it's an operating lease, rental income would be recognized in the P&L account on 31st March 2016. This is that event number 2, which we totally missed actually in the discussion. How much mark? 1 mark. See, understand? Our mind will go to the day 1 purchase. But if you look at the question, show how it will be shown in the financial statement on 31st March 2016. This year what comes? 2011 purchase is going to come this year? No. This year, rental income will come in your P&L account. Reclassification rent for 6 months, that's what they said, no notice period of 6 months and all. Have that, why? Simply they told there. Why he gave the notice period, 30th September, he paid the rent. So this is your second event. And the third event is the measurement of inventory at the end of the year. So what is your cost? 2 crore 60 or 26 lakhs per unit. NRV is how much? 4.6, which is more than the cost. So you will show under current assets and flats will be measured at the cost of 2.6 or 26 lakhs rupees per flat. Yes, nice question. Derecognition of the, where is the question of derecognition of the reason? Okay, this should, okay, that means you missed one more thing here. Huh? You missed one important thing, the word called operating lease. Missed it. Because when there is an operating lease, there is no question of finding out the present value. No, it was a finance lease for the lessor when you find the present value. You miss it, you misinterpret it. That's why every word, friends, and when you're reading, look, your mind should be very fast, quickly running in different standards, what we learned there, what is here, what is there, what they are trying to ask, which day they asked you. Maybe there can be a print mistake also. That is also we have seen in examination question. 2017 they may say, then interpret, this must be 2016. That also we have seen. And such print mistake, first go and attempt it. You know it, you don't know it. Grace marks you may get for attempting that. All this should be strategy, your strategy you should be ready with. Okay, during mock test we will do. I will give you more. Let me see how much you have retained my jnana which I have been giving right from the beginning. Do this in the exam, do it in the exam. I will test now, okay, in upcoming days. Clear, students, this question? Yes. Now we will move on to the next question. Again, if you see this question has already come for the exam. This was there in your test your knowledge when under new syllabus. This time they added. Previously, this was part of your MTP and RTP. An RTP question came in the exam. Ditto as it is. That's why I have given you here. Otherwise, I would have given you next, telling, look, do it yourself. So there is no change here, an RTP question, but it was added in your new. That's why I am focusing more on your new study material, new syllabus study material. Okay, you should tell again. X Limited owned a land whose future value is not determined. What it is? Investment property. You own the land and you don't know. Undetermined use is investment property. See, straight away, first question only. How should your property will be classified? Yes, 1 mark. It's a 5-mark question. Straight away you got 1 mark here only. Now during the year June 2011, this is when 31st March 2011, X commenced the construction of the office building for its own use. Now it will shift from investment property to PP, and construction of the building will be progress as on 31st March 2000. That means it is CWIP now this time, not in inventory. How should the land property be classified in its financial statement on 31st March 2012? CWIP. Will there be any change in the carrying amount of the property resulting from the change of investment property? Land? Yeah, land is classified as an investment property. When 31st March 2011. In June, they commenced the construction of the office building. So on 31st March 2011, there was one. Sorry? No, I didn't get your point. Okay, land. What will you call it investment property anymore? Because your work is not yet completed, no? This is a building, yeah, it's the land and buildings. Or you may see what you can do, you can always show it as a separate land portion separately. Okay, but it is the land, we have done that in PP 16 also. We constructed full building, this cost, that cost we have taken. Ultimately, we bifurcated land portion separately, building portion separately. But when you separated land portion, this land was under which class? You remember one problem we have done in 16, there was one filling land, there was one land in which office was situated, there was one land in which this, what is it called, sales office was situated. Which class it is? You remember? We discussed that, okay, this should be only a separate class, this should be separate class. So this land would be part of your PP. You cannot show it as an investment property there. It is a misguiding. But on that land there is a property. Understood, no? That's why you have to get connected with that question now. Yeah, nice. Are you clear? Will there be any change in the carrying amount of the on change of the use? No. Whether the change in the classification 2 from investment property is a change in accounting policy? No. Why? Because it is classification. Because of its use, its change is not a policy choice. Would your answer to 1 will be different if their management had an intention to commence the construction? They didn't actually commence. What it is? Investment property. Nice, no? 5 marks. Attempt first, no. Question 6C, I am telling you straight away go to question number 6. A, you don't know, leave one space. You make one guess how much pages required. B also you don't know, leave one more space. Go to C, complete this first. Because don't mix everything. C, 6C, 2B, 4C. That creates a irritation to the evaluator. Later you don't know. 6A didn't attempt only. Just write one full cross. Attempt more than 100 marks. Don't look into the choices. Why? Because yours is a system evaluation. Whichever questions has got highest marks, that gets selected. Followed, no? So you need not apply your mind. Just go on doing. You go on doing. Even though you are attempting extra, suppose you have attempted 6C, you attempted only 1 mark, 1 question for 5 marks. You got full 5 out of 5. There's one more thing, you got 3 marks. Now you are being awarded 5 marks. Whichever extra you do, because extra is any extra, no? Now if, okay, chalo, by default something extra was done. Which one should be disregarded? One should be disregarded. Whether I do manual correction, whether it's a system correction, one should be disregarded. Which one? The one with the lowest mark. Because he doesn't want to penalize you. Keep that in mind. No, full 6th question, how much marks you got? Say for in total, 12 marks. Question number 5, in total how much you got? Say 10 marks. Now both were optional to you. System, you are going to get 6. You are going to, this is disregard. No, not any, choice means anything you can take, no. Okay, do it, no. Try your luck. Why you want to leave? And that should happen only when you don't think. If you start sitting and thinking in the examination hall, first you complete 5, no? 5th one you complete, then you tell me. So you should not think in the exam hall. Just go on doing, go on doing. Just find out, do it, find out, do it. When you see that 125 marks you can appear. Have some strategies. Okay, so nice. So we have seen that it should be undetermined use. That is why it is the investment property. Now change in the classification evidenced by a change in the use. It ceases to meet the definition, reclassified. Okay, mere management intention does not give. So you commence the construction. Okay, so it can be reclassified from investment property to owner occupied. Okay, they have given they didn't call it PP, what is that called, capital work in progress. They said word called owner occupied. You can also use the same word. Now, it's not going to change the carrying amount. No, it's not an accounting policy choice. And mere management intention is not going to do. You continue to be classifying it as investment. Clear? Yes. Now we will come to the last part of this. It's called disclosures. Understand? It's a simple, a small thing. Now, is as per 106, whatever disclosures you are going to give, which we didn't discuss only, that you have to give because you are a lesser. Remember, if it is an investment property to you, probably you must be a lesser, no? Otherwise, you must have kept it vacant. If kept vacant means Ind AS 116 not applicable to you. But if you have given it on rent, 116 becomes applicable. So whatever 116 are there, that you have to give, plus you have to give a reconciliation of the carrying amount of the property at the beginning and the end. Do you remember when you say PPE on the face, there is no note to account. In that note to account, gross value, add additions, total gross value, accumulated depreciation, add a depreciation for the year. Like that, addition, how much you are holding for sale, how much separation happened, not separation, depreciation. Depreciation, I'll change this. It is D. Reclassifications you have done, how much movements happen. So you have to give one reconciliation statement first. Because on the face of the P&L, you will have one heading called investment property. You will tell one amount there. in the balance sheet. Now, in addition, you have to give this. This is 40. From here, whatever we are going to discuss, no, it is as per 40. So, what is that additional disclosure I have to give as per this standard? Is reconciliation statement you have to give. Are you clear? God knows, we didn't discuss. No. If you want to know, then we have to open the study material. There is one last chapter called disclosures. We have to see that you have to lesser gross payment of the, what is that called, the lease liability. So many disclosures might have been there. Followed, no? Which a lesser has to give. Prithvi, are you clear, no? In 160, every standard, there is one element called disclosure, which we didn't discuss, unless it is an examination point of view. Now, this is what you need to give. Then you have to give how much you recognize in the P&L account. Remember, in that previous 6 months operating lease, he was getting cash, no? You may have it as another income. You might have clubbed it. So, you have to tell how much rental income did you receive from this. You have to give a breakup there. And how much direct operating expenses which generate from the property in which generated income and property which did not generate it. You might have kept one property vacant, but you must have incurred some expenses. So, you have to give that breakup there. Then you have to tell about your accounting policy for the measurement, like initial measurement you have done. See, if you open the study material, at the end of study material, now this year one more new change has been done. I don't know how it's going to come. They have given the annual report extracts. Maybe questions can come. Sudoku they have given. Please see that, because in MCQ they may ask you that Sudoku, or one Sudoku, you know that, no? Fill in the blanks, left from right, right to left. Okay, please see that Sudokus, it must be simple, are crossword puzzles. Because they have given means they may ask you. Simply for fun, they have not given. Just go through that, no? One of the questions may come for your MCQ. Annual reports are given. In audit, I have seen that on an annual report extract, they have framed one question. Very beautiful question. So, these are all the additions they have done. Sorry? 5 marks. Audit, you don't worry. Audit 5 marks only. And in that 5 marks, no, and or they would have been used, and that 5 mark question is split into 2-3 sub questions, which you have to identify how many questions are there in this question. Followed, no? Then you have to tell how subsequently you do, which method of depreciation you followed. So, that's the disclosure you have to give. You have to disclose the fair value done by an independent valuer. And if you are not appointed that independent valuer, you have to tell that we did not appoint independent valuer and valuation is not as per international valuation standards. Then you have to disclose the fair value, and if you cannot measure, then you have to tell which property it is, and you have to give the range of estimates, like my fair value may be probably between this range to this range. Then existence of any restrictions on realizability, like is there any restrictions on you to not to sell that property, not to give it on rent? If no, if it is there, you have to tell that. And last, if you have got a contractual obligation to purchase, construct, develop investment property, that you have to tell, like contractual obligation to develop. You have purchased one land, and land purchase has come with the condition that you have to develop this. You have kept it vacant, but there is one obligation sitting on your head. So, this is what you need to disclose. Are you clear? Now, how they may ask you a question on this? You are interested and curious to know? Okay, next. Very highly probable, highly important question is question number 7, a last question on this chapter. Shaurya Limited, and see, this question has come in your MTP and RTP. Initially, I thought I'll give it as a part 2, phase 2, but see, there is no many questions here, hardly 2-3 questions which you need to focus. That's why please study this question on disclosures. No, I was giving part 2, but then they given me in the test your knowledge. Then there is no question of part 2. Every test study material question is part 1 only for us. Now, Shaurya owned a building which was specifically used for earning rental. Confusion? No. Investment property. The company has not been using the building A or any of its facilities for use for a long time. That means there is no bifurcation required into PP and this. The company is also exploring opportunity to sell the building if it gets a reasonable amount. Exploring. So, it is not 105 now. Otherwise, now you have to apply the conditions of Ind AS 105. non-current assets held for sale. So one of the reclassification, it may, if you want to sell this, it may shift from investment property to non-current assets held for sale. So there are some conditions for that. Capital appreciation, you keep it for indeterminate use. But what if you decide to sell it? It is ready for sale now. Then you cannot be investment property no anymore. Then it will shift to non-current assets held for sale. There is one more principle for that. You will get only if you sell. But when you are going to sell? Okay. Will you sell right now? May not be. So see, again, you need to have an intention. Unless your intention is not to sell right now, but why you see, suppose I might sell in the future investment property, but if when it is going to become 105, because there are some condition, one of the condition is you should have given paper advertisement. You should be committed to sell. You should have called bids from the investors, buyers. If all activities you have done, no, yes, it will get shifted from investment property to assets held for sale. And it is a separate disclosure in the financial statement. You see, with these all these things, how much clarity you are going to get on the financial statement. When you complete, I will show you again. I am going to end this standard by again taking back you to the schedule 3 format, which we started on day 1. Probably certain things you are not clear about it. Now, by looking at it, every single amount you should be clear. What it is, where it came from, how the classification, what is the principles. You need to be clear. You need to have that clarity. Now, following information is relevant for building A for the year ended 31st March 2020. Building A was purchased 5 years ago for 10 crore rupees and the life was 20 years. The company follows straight line method. So by now it is a 20 years, that means 2.5 you must have written it off. 7.5 must have been its book value, correct now? During the year, company invested in another building called B now. So you have got two buildings this time, for the purpose to hold it for capital appreciation. This is also an investment property. This was purchased on 1st April 2019. Okay, it's the 1920 year at a cost of 2 crore. Expected life is 40 years. So you, how much is the depreciation? 20 crores divided by 40, 0.5 minus 20. 19.5 must be the book value at the end of the year. See, you have got property A. This property A, did you rent it out? No. You purchased it, specifically used for the purpose of earning rental. Company has not been using the building. Okay, they are using it for rental. 5 years back they purchased, and this year they purchased B. So you have got two properties now. Very clear? Till now, no confusions. Further, during the year 1920, company earned or incurred the following expenditure. You earned income from two property and you spent these much cost for that property. The company does not have any restrictions or contractual obligations against the building A or B. Why this is required? For disclosure. Disclosure. Just now we discussed, no? If you have any disclosure restrictions, you have to disclose it. For complying with the requirement of Ind AS, management sought an independent report from the specialist to ascertain the fair value. What is the requirement? Disclosure of fair value. Who has to do it? Independent valuer valued the fair value as per the valuation model recommended by international valuation standards. So whenever fair valuation is calculated, you have to tell in the notes to accounts as per which standard it has been done. And it has been computed by method of present value DCF, discounted cash flow method. You have to tell that also. How did you get it? The other key inputs of the valuation, estimated rent per month for valuation is 50 to 60. So you have to give the range, in the disclosure just now we see here, you have to give the range of estimates. So what all we need to disclose, everything is given here, we have to just write it. That's why it's the easy question. And somebody who has not understood the disclosure point, they will wonder what is this. It's further expected to grow at the 10% and weighted average discount is 12 to 13. That means there is a range of valuation. Assume that the fair value of the properties are discounted cash flow measured at 10.5. The treatment of fair value is to be given in the financials as per requirement in Indian accounting standard. What is the treatment of building A and B in the balance sheet of Shaurya? Investment property. Provide the detailed disclosures computations. Which computations? What all computations involved here in this problem? As per relevant Ind AS, finding out the carrying amount, okay, or reconciliation from the opening to closing, and then P&L from these properties. There are two computations involved, no? First computation is the reconciliation. Second is the how much P&L you recognized. You recognized rent, but you spend money also expenditures, no? You are required to give a separate note or a schedule of the given asset in the balance sheet. As if you are treating, you have to prepare a schedule 3 balance sheet. Easy question, but a disclosure point. Are you clear? So if this question comes in the examination, you have to first write treatment, both are investment properties, and subsequently measured at cost, 1 mark. This question has come for 8 marks in MTP. Now, notes to accounts extract. So first disclosure is investment property, 31st March 2020, gross block is 10, addition during the year 12, so closing gross block is 12. How much is accumulated depreciation? 2.5 for property A. During the year, how much depreciation came? 0.5 for property A, 0.05 for property B. Just, it's a simple, no, straight away. We don't need, by looking at the question only we can make out. So my closing balance is 8.95. But the way the presented is as per the standards or schedules. Then you go to the P&L account. How much is the rental income? 1 crore. How much direct operating cost? Add everything and say 0.13. Depreciation, so much so. So this is your profit from investment property. And all these items are clubbed in your entire big P&L. So you don't find separately there. That's why in the notes to account, they give you disclosure. Look, from this property, how much profit I earned. Then you go there, disclosure note. The investment property consists of A and B. How many you should tell, no? And the fair value is 10.5. And this 10.5 is done by independent valuers using International Valuation Standards Committee. And company consider other factors also, like terms of the agreement, area, life of the assets, etc., to determine the classification. There is no restriction on the realizability. There is no contractual obligations also to develop anything. And the valuation technique, we have used the discounted valuation technique. Estimated rental will be 50 to 60 for this purpose. Growth will be 10% and discount rate will be 12 to 15%. Easy question. But if I understood the background of this question, this is very easy. This is purely coming from disclosures. No calculation required because every information is given. So we have to just present one note. So 2 or 3 questions are highly probable questions. With this, yes. Theory question number 4. Yeah. Revalued, doesn't matter. That's what I told in the previously also. Even though this must have been, PP must have revalued, but the day, whatever is book value, that becomes your book value for the investment property. Revalued cost. On that day, what is your book value? That becomes your new value. Nothing. That all those things are not there. Okay, so with this, we are done with this small cute standard.